Hello and welcome to another episode of Cryptocurrency News. Please like, please comment and subscribe. Please look at the links below. They will save you money and give you some free money. So in the last episode, I intended to talk about everything from March 12th till March 25th, but I ended up banging about what happened over 3 days for 34 minutes. So let's just continue. Here we go from the March 15th. So this is what has happened on the March 12th, 13th visualized. So this is the Bitmex, let's call it circuit breaker, we can call it DDoS, we can call it whatever. And then liquidation engine gives up here. So I was looking closely when the liquidation engine stops selling. Well, let's go back to the start. So essentially a big dump from 5.6k to 4.8, and the liquidation engine just has so many contracts that it just begins aggressively selling them all, and it just keeps selling and selling. And these are the orders by liquidation engine, and it just keeps pushing the price down. I believe these are the models just making sure that the liquidation engine unwinds their position at some point, and it has been there. So all these yellow dots are orders posted by liquidation engine, and you can see that it goes up and down. So when the price goes up, the price offered by the liquidation engine it keeps going up, so it's trying to get the best fill. So this is the massive position of the liquidation engine, and here something happens. We'll never figure out what it was, maybe in 2 decades or something. But the trading pretty much ceased, and it pretty much saved crypto. Maybe it would have just dipped more. Like it looks like it's ripe for a further dip. So liquidation engine keeps unloading the positions. It wasn't very aggressive here, it was extremely aggressive here, and at this point it just becomes a bit less aggressive and unwinds their position. So it took 6 hours and 400 million liquidations for the liquidation engine to finally stop, and this is what I was looking for, so I was keen to go long at this point. And I've tweeted this in real time, so if there is ever an action like this, I will definitely tweet when the liquidation engine is done. So I have never seen Bitmex order book skewed so much to the buy side. Open interest has been, well, at that point in time on the 15th, is 160 million versus 80 million sells. Like nobody has their orders there anymore. Like everyone is liquidated. So 80 million on the sell side. Like you can see 10 million market orders executed within seconds. Like I've seen 3 executed one after another many times. Execute 8 of them and you're at 20k if there are no hidden orders. These are some highlights from the Bloomberg terminal. You can pause here, but essentially it's just big money printing orgy. The Fed has just cut the rates to 0 and entered into QE again, and now we have learned that it's a QE infinity, and that's just a nice touch. The Chancellor on the brink of second bailout for banks, and surprise, surprise, we're here again. 700 billion quantitative easing, interest rate cuts to 0. This cartoon explains it. You can find it. It's funny. So Samuel Reed, he is one of the co-founders of Bitmex. So he says that they were under attack from a botnet which appears to have been probing the system for some time, and this botnet was also responsible for the attack on the February 15th. So that's big. It's possible that this dump has been artificially kind of propelled or artificially created. Some of people have been partially refunded, but only small amounts, and it's not much. So Bitmex was just trying to make things right, but there are some traders who are unhappy, including Simplify. So essentially, this COVID is an opportunity. It could be the opportunity of the lifetime. So I'm just drafting millions of scenarios, preparing plans, and assessing the outcomes. You need to, make sure what is common sense, what does macro imply, what are the fundamentals, how do you put politics into this? I mean, I think there will be a rapid recovery at some point, and I don't want to miss it. And that's my primary goal for this COVID, just to make sure I buy some stuff. So it doesn't mean that I'm all in and that I will be liquidated and broke in a while. But you guys got liquidated, so I bought. When you get liquidated more, I'll just buy more, and I'm just eyeing everything that is there. And if it goes down, I will probably be a buyer. Funny fact. DAI trades at 1.1 USD and was over 1.2 USD, so 20% premium. So you're buying $1 for $1.2. Everyone has sold crypto, waits for a dip. So they have already sold. That's the truth. And there are some funny facts about these DAI liquidations. That's the VIX. Breaking a record high. That's volatility index. And here we are on the 16th. I was in a state where I don't know whether I want BTC to go up or down. Like I don't mind it taking off and mooning, and I don't mind it going down, so I buy more. And that's an excellent state of affairs, and I recommend you guys reach that state as well. Italy banned short selling. That's just hilarious. That's not how the effective market works. So here it just came to my realization that we are not leaving this backwardation anytime soon. So we were in the backwardation, and that just played out. We are on 25th, and we are still pretty much in backwardation. The funding rates are negative. It's not natural. It will just create such a massive bounce. Like, we've already bounced a lot, but if we make a dip now, I will certainly be a buyer. And that's an interesting post. I've been criticizing ETH, and I still don't like it too much, but I'm sold on it, and I'm long. And these are just a few reasons. Utility that I dismissed before. There is plenty of utility in ETH. ETH can do a lot of things that Bitcoin can't. It doesn't make such a sound money as Bitcoin does, but it can do some clever things. There is a big community, and this community is building stuff. You cannot ignore that. They do some awesome projects like Uniswap, and Uniswap has been just a completely random project made by a guy who just got some funds or some time or a job to do, and he just made it and just left it as it is, and it's a free project, and it's an awesome exchange. It has low valuation in relation to BTC. Oracle limitations are not as bad as I thought. Oracles are not great, they are not trustless, but they are not bad, they are decent. I'll talk about an Oracle completely failing in a moment, but ETH isn't that bad. Loads of Ethereum will be trapped in bad contracts, and this money will never be bailed out. And some clever people have positive opinions about ETH, and that includes Susu and Skew.com. And I trust their opinion as well. But I have formed mine, and I now like ETH. The recent dump has been a massive opportunity. The ETH loan collateral got liquidated at around zero, as liquidity on the buy side has dried up and ETH network has overloaded. People with DAI loans were forced to sell their ETH at around zero. It was around a $4 to $8 million worth of ETH sold at around zero, and that's because of the network congestion and no one on the buy side. Another funny fact, some were supposed to be liquidated, but because the Oracle was lagging, you were supposed to be liquidated, you knew the liquidation is coming, but the contracts and the updates were so slow that it was all delayed, so you could just do a tactical bankruptcy. So you knew that you were supposed to be already liquidated, so you can just wait until this happens and get liquidated at a decent price. And some maybe did that tactical liquidation, and strategically they did nothing, and accidentally they got liquidated at zero as a result of that completely dried up liquidity on the buy side. This is how the loans work. So you just borrow money borrow US dollars or die actually against your ETH, and if it drops below the certain price, you are liquidated at that price. But if there are no buyers, you're liquidated at zero. Bitmex saying inflation is coming. I agree with that. Skyrocketing stable coins. The open interest on stable coins is massive. Bitcoin loves low interest rates. One could argue that raising rates have propelled the 2017 bubble, and now we're back to basics, back at the low interest rates. Credit Suisse using some strong words, and essentially they worry about integrity of fiat currency systems, and that's Credit Suisse. They are not just some jokers, and they are worried about the integrity. The more people worry about integrity, the more people will buy Bitcoin. Reverse arbitrage, dumping your home and then living in Airbnb at $20 per day. Totally doable. 83% of passengers of Diamond Princess cruise ship, that's the one where there were some COVID cases, they did not catch COVID. 48% of those which got the virus had no symptoms. So maybe it's not that bad. And I think a good crisis now and then is a net positive. It's a reminder of what's important. It makes people rethink a lot and justifies changes, many for good. Is there something that has been annoying you for years? Well, maybe you can just say coronavirus and change it. Well, hopefully it's not your wife. So this is about that liquidation. So apparently transactions were not being executed due to network congestion, and so liquidation auctions for MakerDAO were not being executed, and then someone was able to step in as the only bidder and buy $8 million worth of ETH for zero. That's a good buy. Update from Belgium, complete lockdown. So in theory, tweet from Suzu. This is in theory the moment Bitcoiners have been waiting for. Several emerging markets are now pricing in significant risk of sovereign defaults. USD on an inflationary course, and will be hard to turn back from that course. If BTC market holds these levels, 50k relatively quickly is possible, and I totally agree. Like maybe 20 to 40, but I think it's coming, and I think it's now closer than it ever was. That's an excellent chart. 1001 days in the life of a Thanksgiving turkey. Everything just goes up until it goes down. So good. Whether you believe Bitcoin scarcity is socially enforced or absolute, in many emerging markets it will no longer be possible to even audit the money supply. Like, people don't know how much money there is in the world. It's impossible to say. And how hilarious is that? Like, you cannot tell exactly how much money in a lot of markets exists, and it's just bad. Crude oil completely dumping. Canadian Natural Resources loses money on each barrel they produce at the moment. That's bad. This is not a drill. Risks of sovereign defaults skyrocketing. This usually means massive devaluation. Rates at 0% or below 0% everywhere. QE infinity. Governments buying risk assets. They shouldn't do that. Trust in USD is falling. Social fabric and valuations are really suffering. Bitcoin has been born for this, and this is real. Don't be mistaken. Like, Bitcoin has been born for all this. This is just how much money keeps being printed, so the numbers just keep going up. I hope you stay safe, guys. Buy some food just in case. That's because of the virus. You can go wrong with this. Google some prepping. Maybe you'll find a few ideas that you like. Maybe you'll like the whole idea of prepping. The virus should be gone completely in a few months, but it may not be. And food can be repriced, and we might see inflation. Like, things can go really bad. Just have some food and some basic things. You will not go wrong with that. I think that there is a chance that the call options will go down by 50% in USD value before we take off. I would love to load that, but the implied volatility is so bonkers that I have to be a seller, and I've been selling some volatility. It's just too high, too expensive. Too many people went completely wrecked. Too many kind of option sellers. That's an interesting proposal. $2,000 for every U.S. citizen and $1,000 per a kid per month, and some further benefits. That would, well, that's not too bad of an idea. That would put money in the hands of people, but overall, it's just massive money printing exercise, and you know, it's just very risky. Here is a good thread by Tony Stewart. If you don't know much about options, just read this thread. Tony Stewart, Pillion Cap. If you know about the options, you might still find a few interesting things. It's just a good thread. When we catch up with 10K level, optionality will get hilarious. Just like some of my long-dated calls from 6K got in the money after the prolonged 3K nonsense some long time ago. And at the moment, people have sold these options and they have to stay delta neutral. So because they've sold, they had to sell Bitcoin on the way down because the chance of these options coming in the money is so low. But on the way up, they will be forced to rebuy. So the implied volatility will stay high-ish, and that's just something to keep in mind. If we go up to 10K, these option sellers will have to buy a lot. 1 month ago, S&P was at its all-time high. Now 25% down. Probably, well, I believe now it's more than that. So a lot of places enforce stay-at-home orders. That just pushed the prices down. This is a very good bio. Jack, the founder of Twitter, Bitcoin, nothing else, just Bitcoin. Unus said Leo just pumping. Criticism of people saying that Bitcoin is too volatile to own. Now this is volatility of Bitcoin, volatility of S&P 500. It's back to normal. Well, Artemis Capital and Christopher Cole, such a clever guy. Watch his video on Real Vision. A criticism of Bitcoin is that it's too volatile to own. When trillions of USD of financial engineering that's short of volatility for yield, they lever at once. So is the stock market. So volatile is the stock market. Volatility is an instrument of truth. The difference between the Bitcoin has just been more honest about the true risk, and the volatility has just been high. So Italy extending the lockdown. Low volatility is anywhere and everywhere an expression of complacency and control, the great moderation. Bitcoin volatility inscribes the world as it is. It is no more or less volatile than it should be. And I agree, Bitcoin has been designed to be incredibly volatile. Large chunk of optionality has just expired. That was Friday last week. Next and last big chunk expires in 1 week. Volatility should come down a bit next month, and that's after the expiry the day after tomorrow, so Friday morning. The more implied volatility there is, the more realized volatility there is, because people just arbitrage. So you know, that's because people are hedging and staying delta neutral, unless your volatility seller is completely YOLO and doesn't hedge, but that's not the case too much. That's just a tweet from Tony Stewart, that thread which I've recommended. That's an interesting point. The skew, why skew is important. So skew is important because usually people buy more calls than they buy puts, and the calls are more expensive, so you can make some outsized risk-reward trades. So you can buy puts and buy futures rather than buying calls, or you can just make a volatility trade where you just buy puts and sell calls, and because of the skew, because people like to buy calls, it will be an asymmetric risk-reward payoff, especially on some maturities. So it's interesting to look at these and take advantage. Funny fact, if you have purchased Ethereum call options with spot at around 100 on Deribit, you have, and by that I mean September calls, you have made almost no money on the way up because the implied volatility has been so high and it's been going down. So if you are at the bottom, you are supposed to buy short-dated calls, not long-dated calls. Bitcoin is the revenge of the nerds, and I agree. Bitmex remaining in discount at the backwardation. There has been a major arbitrage opportunity on silver in the past few days. Paper silver dumped due to mass liquidation, but physical silver sold out everywhere and often selling 30% higher. Massive arbitrage opportunity. This could be an opportunity of a lifetime if you are a trader on legacy markets. 1 trillion daily repo. I mean, this number is hard to wrap around your head. Well, it's hard to wrap your head around this number. One bill for treatment of COVID, $35,000. That will require a lot of money printing. A nice meme for Bitcoin holders. I'll just keep it on. So let's do the month. Let's do the math. 300 million people, $2,000 per person per day. The initial cost $600 billion for that bill. 300 million per person times $1,000 per month for at least 12 months. That would result in $3.6 trillion. So you'll need 3.6 trillion to have this $2,000 per person per month thingy implemented. So that would potentially could lead to hyperinflation, and this is why Bitcoin has been born. So yeah, this is the post retweeted from Bitmex. Essentially, liquidation engine, when it took up all these liquidated longs at the worst non-exited point, the liquidation engine was at 5.6 thousand Bitcoin loss. A very plausible number. Unemployment. Look at this chart. Unemployment claims. It's just really, really bad. Expanding monetary base cannot solve all the underlying problems. They will try, and they'll create all the new problems associated with that. So all they're doing will be massively inflationary, and because the supply is inelastic in terms of Bitcoin, the Bitcoin price will just have to go up. Like there isn't anywhere else for it to go. And that meme again, printer go brrr, money is just being printed, and this is gold mark. Gold versus German marks has just skyrocketed. Again, more money printing, unlimited. Fed promised to buy unlimited amount of treasuries and mortgage securities. They will just print their way out of this, and then the trust in USD will be lost. Not to say anything about the other currencies, which have way less trust than USD. People don't realize that, but the monetary experiment of hyperinflation was tried 2,000 years ago in Rome when they debased their coinage. It failed 2,000 years ago, leading to one of the reasons for Rome's collapse. Central bankers today dare to try the same methods, like exactly same methods. And that's their chart. So the outcome is known, that there is only one outcome. The question is when. And it can go on for decades, so don't expect an immediate loss in trust in US dollar. Again, the word for the decade will be trillion, like everyone just keeps printing trillions of dollars. Sudden collapse of Airbnb, some people just buying, well, not buying, but renting flats and just converting them in illegal Airbnb businesses. These people are pretty wrecked at the moment. Now, people were saying some bullshit stories that Bitcoin would stop working in case X. Now, it is the only asset being internationally freely traded 24/7 at the moment. Gold is stuck in closed airports behind the doors. Fiat withdrawals is being limited by banks, and markets have stopped switches and have stopped, banned short selling in some areas. Fed capitulated into the market, and Trump's tweets, budget deficit at 1 trillion. So all of this is super important for Bitcoin. The Fed might start buying equity, and that would be massive. Like, so far the Fed was supposed to buy treasury notes, and they're buying mortgage securities now. There were talks in the past about them buying pension obligations, which are effectively stocks. So, at some point the Fed might just buy stocks. That's just wrong. Do you remember the Brexit drama? It was supposed to end the world, and where are the anti-vaccination activists? Organized crime has announced, the gangs in Rio de Janeiro said that they are enforcing a lockdown from 8 p.m. The statement reads, if the government won't do the right thing, the organized crime will. This is just how the social fabric breaks down. That's a summary. Day 1, $1 trillion. Day 2, $1 trillion a day. Day 6, 2 platinum coins, $1 trillion each. Day 7, infinite money. That's how it has been unfolding. And now, the taxation, it's not taxpayers anymore, it's unwilling inflation bearers. So people holding assets denominated in USD. That's sum up to $6 trillion. Look at how many zeros there are. That will be the word of the decade, truly. Again, here some more trillions. Now this is important. The expiry the day after tomorrow. Implied volatility will drop. All these option sellers who have been selling options, they have exceeded their risk limits. They just need all of this to expire. After that, they will be able to sell some more. So from Friday on, I think implied volatility will just slowly start normalizing a bit. And I say normalizing, but the truth is that the implied volatility is pretty close to the real value. So I'm looking into buying a volatility. If you had some withdrawals or trades, they might not be confirmed yet, and that's because of the difficulty on the network. So we all know how mining works. If you don't know, you can describe this as guessing the block. So difficulty adjustment minus 15% is happening in 11 hours. The transactions should be confirmed after that. Because the price dropped, some miners had to shut down. The network's guessing power has reduced, so the guessing game is now 15% easier. So with your guessing machines, with your guessing power, you can do better at finding blocks, and you will be closer to 10-minute block times. And this will be one of the biggest difficulty reductions in the history, like one of the top 3 or 4. And that is us. I have managed to clear the backlog of news. Thank you very much for watching. Please like, comment, and subscribe, and look at the links below. They will save you money.